Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Thursday, March 27th, 2025. This is Nelson John. Let's get started. Wipro has landed a $650 million 10-year contract with UK-based Phoenix Group, making it the second mega deal in less than a year. The Indian IT giant will manage policy administration, claims, customer support, and compliance for the insurer, with plans to set up UK tech centers and onboard Phoenix employees. This reflects our deep expertise in transformation, leveraging cloud, data, and AI, said Nagendra Bandaru, Wipro's global tech services head. For CEO Srini Pallia, this is a much-needed boost. Since taking over in April 2024, he is focused on profitable deals, cost-cutting, and internal promotions. However, Wipro's revenue remains under pressure, expected to decline for a second straight year. The deal bolsters Wipro's Europe business, which saw a 4.4% dip in FY24. But it's not a $1 billion plus mega deal, leaving analysts watching for more. Meanwhile, rival Coforge just signed a $1.56 billion contract with Sabre Corp, raising the stakes in IT outsourcing game. Can Wipro's deal momentum translate into sustained growth? The next few quarters will tell. Cognizant has its sight on joining the world's top 4 IT services firms: Accenture, TCS, Capgemini, and Infosys by FY27. CEO Ravi Kumar outlined a 4-point strategy to boost profitability, win large deals, and drive AI-powered growth. "We want to be in the winner's circle," he declared at an investors' meet. Despite a 4% revenue rise in 2024 to $19.7 billion, Cognizant's growth has leaned on acquisitions, not organic expansion. However, operating margins improved to 14.7% due to cost cuts, including a 10,900 employee reduction. CFO Jatin Dalal aims to expand margins by 30 basis points annually through AI-driven efficiency and managed services. Industry watchers are cautiously optimistic. Analysts at Kotak Institutional Equities note Cognizant's push for mega deals and AI-led efficiency could intensify competition for Indian IT firms. But Cognizant still trails rivals. Accenture and TCS both grew over 4% last year. Investor confidence remains strong, with Cognizant shares up nearly 27% since Kumar took charge in 2023. With activist investor Mantle Ridge upping its stake to $1 billion, all eyes are on whether Cognizant can turn ambition into sustained growth. Private equity giant KKR is set to reduce its stake in JB Chemicals and Pharmaceuticals, selling a 6.8% holding worth $200 million on March 27th, with an option to offload another 3.5% for $100 million. The sell-off, routed through promoter entity Dow Investment Holdings, will be executed at 1,625 rupees per share, over 4% below the last closing price. KKR had invested 3,100 crore rupees in the Mumbai-based pharma firm in 2020 and currently holds a 53.66% stake. While JB Chemicals' profits rose 21% to 162 crores in Q3 FY25, concerns remain over high valuations. The stock trades at a price-to-earnings ratio of 42.5, well above its 5-year average of 36.35. CEO Nikhil Chopra remains optimistic, citing strong domestic growth and promising pipeline in contract drug manufacturing. However, with the stock down 10% year-to-date, investors will be watching closely as KKR trims its position in its high-valued pharma play. India is stepping up its artillery game. The Ministry of Defence has inked contracts with Bharat Forge and Tata Advanced Systems to procure advanced towed artillery gun systems, ATAGS, and high-mobility gun towing vehicles, respectively. The deal, worth 6,900 crore rupees, is part of the 1.4 lakh crore rupee capital procurement drive for this financial year. The ATAGS, a 155mm 52 caliber artillery system, will replace aging guns and significantly enhance the Indian Army's firepower with greater precision and range. This marks a major step in modernizing India's artillery regiments and boosting operational readiness. Beyond military strength, the project is also a win for Atmanirbhar Bharat. By strengthening domestic gun manufacturing, the initiative is expected to generate employment and bolster India's defense ecosystem under the Make in India push. This deal follows the Defence Acquisition Council's recent approval of 54,000 crore rupees worth of new military hardware, including airborne early warning systems, torpedoes and tank engines. With streamlined acquisitions processes, India's defence modernization is moving faster than ever. The Indian government is tightening its grip on digital assets. Under the Finance Bill 2025, new legal provisions have been introduced to help tax authorities track virtual digital assets such as cryptocurrencies, an area previously lacking legal clarity. Income tax law did not give legal backing to check digital assets, so we have included it, said Finance Minister Nirmala Sitharaman. Now, this bill also enables tax officials to access digital communication platforms like WhatsApp, Telegram, and enterprise servers to investigate potential tax evasion. Gathering evidence from digital accounts is crucial not just for proving tax evasion, but also for calculating the exact tax evaded, she added. The Lok Sabha passed the finance bill on March 25th, incorporating 35 amendments, including the removal of a 6% digital tax on online ads. Now the Rajya Sabha will review the bill before its final approval. The government says these measures align with its vision for Viksit Bharat 2047, aiming to enhance tax transparency and enforcement in an increasingly digital economy. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a tremendous Thursday.